Hello traders, it's your one and only forex skill coach Team Legend, and I'm super excited having you guys here today on this one. Okay, so we're going straight to GBP USD. Okay, we're going to analyze the market. I'm going to teach you how to analyze the market and how to spot out your trades using the support and resistance. Okay, so we are here in the GBP USD because I've been getting a lot of requests from traders asking me, team, why not you teach us how to also trade the forex markets? Okay, so not just the boom and crash alone, not just volatility index, but also you're going to be getting trainings on the forex market right here in my channel, the Bullish Bear FX. Okay, so if this is your first time on my channel, could you do me a favor and hit the subscribe button, turn on the notification bell also, so that you do not miss out a thing, because right here in this channel all we post are ways to win in the forex markets. The next thing you want to do is to go straight to description right now and join my Telegram channel, okay, where I post free signals and free analysis, and I teach quite a lot that you would also want to take advantage of in your forex journey. So make sure you do not miss out joining my Telegram channel. All right, so have you subscribed? Hit the subscribe button now, turn the notification bell on. You're ready? Let's go. So today we're talking about support and resistance, and what is support and what is resistance. Okay, support and resistance in the market simply means an area where price gets a certain rejection. Okay, when we have price moving to the downside like this, and then it gets to a certain support level, and what happens, you see a move to the upside. Price gets supported to push back up. Okay, and then in the same manner, we have when price go into the upside and gets to a certain level, it faces rejection down back to the downside, and that's what we call resistance. Okay, so support and resistance is just like you having a house, okay, and then in that house you have the roof, and then you have the floor. Okay, so when you have a roof and you have the floor, if you take a ball and bounce it to the floor, what happens? The ball gets supported by the floor and does what? Goes straight to the upside. When it gets to the roof, what happens? It gets resisted and pushes straight back down. So that's the way it works here. Okay, so this is your resistance, this is your support. When you see a line on the top, okay, where price is moving and getting rejected back to the downside, that's your resistance. And when you see a line on the bottom where you have price getting to it and getting rejected back to the upside, you call that support. I hope that's taken. Okay, so now we're gonna spot out. Now the next thing we're gonna do is to learn how to spot out your support and resistance in the market. Okay, so before I proceed, let me clean this off. All right, so how to spot out your support and resistance in the market. You always want to make sure you figure out areas where price have been rejected two times plus. Okay, now we have this zone. For instance, we have this zone to be a good support zone, because you can see clearly the price was supported here in the past and was supported again a second time, so you can plot that out as your support. Okay, when you have that as your support, the main reason why you want to plot this support and resistance out is because you want to have an idea where price will likely get to in the nearest future. Okay, the reason why you analyze your market is because you want to figure out where will price get to in the nearest future. So you kind of like trying to use the past to arrange or to prepare against the future. Okay, so this is what has happened in the past. We could see that this zone, which is serving as a support, was previously a resistance in the market. So you must take note that a certain support level can also be a resistant level when you see a breakout. Okay, when price breaks out of a certain level, you call it, it could serve from a support to a resistance, or from a resistance to a support. You could see clearly that here was a resistance in the past till price broke out. All right, broke out again, went to the downside, came back up to the upside, and then served as support in the future. Okay, so now resistance level here, because we have two torches of resistance in the past. Okay, So we have just spotted out all these zones. Another thing you always want to do is to figure out the highest high so far. We have here to be the highest high. This is just a week, you can leave that, and you have your highest high. Now we have plotted out our supports and our resistance, right? You can see this same zone that was a support before has become another support in the future. Now that we have plotted out the support and resistance levels, the next thing is to anticipate the price movement. Now price has just been resisted and now moving back to the downside. All right, so you can anticipate price to come over to this support level in the nearest future again. Okay, let's see how it goes. Okay, before we proceed, I also talked about you using two different confluences, which is your supports and your chart patterns. Okay, and you know what chart patterns are. Chart patterns are those patterns that the price forms on your charts when price is moving. Okay, there are certain patterns that price usually form, and those patterns are being respected oftentimes in the markets. So that is why you can also take advantage of chart patterns to be able to figure out where price might likely go. Now if you figure out this right now, we have what we call a head and shoulder here being a left shoulder. This is a head. All right, this is a head and shoulder. Okay, maybe let me widen it a bit more so you can see it clearly. This is what we call a head and shoulder. You have the left shoulder, you have the right shoulder, you have the head, and what happens? Price rallying to the downside. So when you see a head and shoulder in the market, you anticipate a sell, because that is a reversal pattern for the bears. Okay, so we had the head and shoulder form here, and that's why we have price going to the downside. Now when you have your head and shoulder, there is another thing you need to understand. When you have your head, this is the shoulder, this is the head. Okay, you always want to ask yourself, where is the neckline? The neckline is always important, because it's from the neckline you know how you want to take your entries. Okay, so this is the neckline of this market, of this chart pattern right now. Your neckline should begin from the first shoulder that was formed. Okay, because a lot of traders would do something like this. They want to put it here and say, hey, this is the neckline. No, that's not the neckline. You need to be careful sometimes. Okay, so this is the first shoulder that was formed. So this is officially your neckline. You always want to make sure you have price breakout completely from here. Okay, before you can confirm that your neckline has been broken. And if you get observed, you see how market rally to the downside and trying to give you a retest. Okay, a retest back to the neckline. So that's for that. Let me get that cleaned up and then we proceed. So now we have the chart, we have support, we have resistance, we have a chart pattern proving a sell. Let's see how price finally moved in the future. Now price broke out of that neckline. Okay, when price broke out of that neckline, what happened when price broke out of the neckline? Price tried to go retest, but when it went to retest, the bulls actually took possession of the market and broke back into the zone. Okay, they broke back into the zone, and when they broke back into the zone, we could see a rejection again, being resisted by the resistance line we spotted out in the past. Now price being resisted again, went back and created a new support level. That support level is as a result of the neckline we had on the chart pattern that we had in the past, right? They can have effects in the market in the nearest future. So right now we don't know where price is going currently, because this is what we call a range. Okay, price is currently in a range right now, so let's see how it moves. Still in a range. While price is in a range, you get to observe something, and what's that? You get to observe that price is busy respecting the supports and the resistance levels that we have plotted out. Okay, price is busy respecting the support and resistance levels that we have plotted out. So as a trader, you always want to look forward to taking your sell entries from resistance levels or your buy entries from support levels. So I'll place this trade right now. price going to the downside, okay. Now I'll place a trade going long right now because I see price coming from support. Okay, I'll just have to clear this from here. Let's say we caught the move around here. Okay, so I'll place a buy trade here, anticipating price to go to the upside. From here, having my stop loss right below the support level, okay, and then having my take profit up to the previous resistance level, and let's see if price will likely go our direction. Now we see price almost hit our stop loss, but we weren't hit because we had a strong stop loss level, and then price bullying to the upside, and that's a take profit for us. So that's you taking advantage of support and resistance levels, trying to take your entries, your buy entries from support levels and your sell entries from resistance levels. So let's see how price moves. I'll place a buy trade here, have my stop loss here, and have my take profit as high as this. Okay, you always want to make sure you're taking note of your risk management. Do not risk more than you can afford in the markets. Okay, so we have this here. I'll place my stop loss right below here because we have here to be a previous support, a new support level that's just been spotted out in the chart. So let's see how price will move. Now we have price rallying to the upside, and boom, our take profit a second time. So this is how you want to always take advantage of your support. And so price now beginning to gain support again due to the fact that we have a support level here in the past, and you see how price is busy rallying back to the upside, breaking out zones. We anticipate the price might likely want to head straight here, so we can decide to place a trade somewhere here, having your take stop loss right below, and then having your take profit right above this level, because we have a new resistance level formed here. So let's see how price plays. Are we going to be stopped out, or are we going to gain profits? Just been stopped out. Okay, we've just been stopped out on this trade this time, so we call that a loss. We will still want to look for better entries. Price came back here, gained support somewhere here, has rallied back to the upside. Let's see how it goes. Price is ranging. This is a range. Okay, I believe you all know what a range is. That's a range is when you have price going up and down without a direction. That's what we call a range. So we allow price to do what it wants to do. At the end of the day, you get to notice the price is still playing around the entire zone. So this is a clear range. You want to be careful until there's a massive breakout from a certain zone. So we're waiting for a breakout, a valid one. We want to wait for a retest. Okay, price has just retested. Now we want to place a sell to see if we can take advantage of this. You have your stop loss right here and your take profit, depending on how price decides to move, right? So you want to take advantage, and then let's see how it plays. You extend it. This is you being patient with the market. At this time, price is in a serious range, but we have taken an entry already. So if you are in fear, you might likely want to set stop loss at break even, just to protect your account. Okay, and then you watch how price keeps going, and this is you running into gradual profit. When we say break even is setting your stop loss at your entry zone so that you don't make a loss nor profit depending on how price decides to move. Okay, so we just want to watch out what will happen. Price has just broken back into the zone. Okay, so this is just exactly how you want to always take advantage of your support and resistance zones in the market, or taking entries as supports. Now if we try to observe what price had created in the past here, we see this zone to be a support zone. Then we already need to understand what price is about to do when it gets here. So you want to take advantage, probably place a buy trade around here, have your stop loss right below, set your take profit right above. Okay, you can decide to set it as long as this, depending on how it might likely want to move, and then let's see how it goes. Okay, so that's the end of trade. So it simply means that in GBP USD right now, you should be anticipating a buy move from here. All right, anticipating to take profit anytime soon around here or here, folks. All right, so we will see how that will play out in the nearest future. So I hope you were able to gain something, guys. Concerning the chart pattern that I told you guys, we could see chart patterns that were formed around here. Another head and shoulder, a wonderful head and shoulder. Due to the fact that I was talking and talking, I didn't figure this out on time. But this was a wonderful head and shoulder pattern that was formed in the market, and you see how it rallied to the downside. All right, so traders, I hope you learned something from this training, and if you really enjoyed it, could you give me a like, because that helps the community grow more and more. And then I'll see you on the next video.